Welcome to Tradier's The Trader's Edge. I am Jim Iuorio. That's Bob Iaccino, who's not at all my sidekick. He's not the Robin at all to my Batman, which we've been having this ongoing argument, but we're fine. We'll square this all out. We are co-hosts. How are you, Bobby?
You make it sound like I forced that on you. I'm good.
That's what I wanted to sound. I want to sound like
I'm literally just going to do the Ed McMahon laugh from now on.
You are correct, sir.
You are correct, sir.
So anyway, I think this is not going to surprise you the slightest bit. I think that interest rates are the main story in all of asset markets right now, which of course I usually always think interest rates are the main story. Am I right this time?
Yeah, I think you are. That 470 10 years starting to bother the market. You look at, for example, what happened to the quantum computing stocks today.
Wow.
Yeah. Major disaster, yet the NASDAQ was positive until yields started to go higher later in the day. Yeah. So, I mean, all you have to do is sort of watch price behavior, and you can't always figure out exactly what's happening, but you can sort of get the themes together to sort of put as a background to your charts.
So what we talked yesterday on our other show with a good, really excellent technical analyst, Mike Arnold. I think we're saying like 60-30, 60-40. We got to settle above there to get us out of the quagmire that is the softness, squishiness in stocks. Do you agree with that assessment?
Yeah, I actually wrote down the downside rather than that. He said we have to get through, a good support level or strong support, 21,009.
Oh, you're talking the NASDAQ, right? Okay, yeah.
Yeah, so 21,900, that's the NASDAQ 100 futures. So
if we lose that, forget about it.
Yeah, and it seems to me like we lost it. But I'm looking at an NASDAQ futures about 21,358. But it was just sort of a mark in the sand for looking at it possibly turning to short-term corrections lower, not necessarily a bear market of any sort.
Right. Okay, cool. All right. I've said this 4 million times. Bobby and I, you might think we are full of shit. It is honest though, and you must know that what we say is our honest opinions, which is much different than when we were on legacy media. One thing you cannot say is that we don't get good guests. We have another one here. This is going to be fascinating. This is going to be about the emotions, mastering the emotions and psychology of trading. This is somewhat of a big deal. We have John Burns, who is a mental skills coach and believes in using neuroscience to control emotions to make you better as a trader. He also coaches professional athletes. He's all on board. I'm very, very excited about this show. Let's bring in John Burns. John, how are you?
I'm doing very well.
Good.
Well. Thanks for having me. I appreciate it.
It's so funny just looking at your resume, and you were down on the trading floors with us, and something that's just so fascinating to me, that aggression and anger fueled us and made us successful in the trading pits back when we were all butting each other's heads. And then all of a sudden it flips 180. It's been a difficult,
completely useless everywhere else, by the way.
Yes, exactly. Useless. My impatience, which benefited me on the trading floor, when I leave the trading floor, some people don't seem to like it as much. Surprise, surprise. But anyway, so then we get to computer trading, which, by the way, and I've said this a million times, I trade, day trade, swing trade, and I my investment strategies are based on mostly technical analysis. I'm not that good a day trader because I get bored, I get emotion. So this is going to be a great conversation for me. But before we get to it, where are you coming from? Anything you want to talk about in the nonsense realm before we get to the meat and bones?
I have a lot of nonsense to talk about, but I'm happy to get to the meat and bones. And by the way, Bobby told me he was Batman when we spoke.
No, he is not Batman. That is a lie.
Okay. All right. I just wanted to make sure.
I'm a half an inch taller than him, and that has always made him a little angry.
That is also a lie, by the way.
That is, in fact, a lie.
Yeah.
So for me,
just for the record, neither one of us are insecure about our height. Neither one of us. So.
Oh no, yeah. It's funny. Like it's always been almost a joke bit for me to act like I'm insecure about my height, but I could give two shits. You know what I mean? Like, yeah. So how tall are you, John?
I'm 5'11". I don't know.
Okay. Wow, you're a giant.
Yeah, you're a giant to us.
Okay, so first of all, I need you to cure me on what mistakes I make when day trading, because my system
Mm,
is good. And then I think it's boredom. And I
yeah.
think it is just sometimes imagining trade setups.
Mm.
But let's dig a little deeper into this if that's okay.
Yeah, I'd love to. So yeah, the interesting thing that I've been talking a lot about recently, especially with retail traders or technical traders, is this idea of markets are an infinite game, right? There's no real rules. It's always going. It never ends. Um, but when we create a system or a style or some sort of framework within which to operate, we then create our finite game within the infinite. And when we then can play the finite game, I had a discussion with a guy today about this very topic of, he was saying markets can do anything, which is absolutely true. But within the context of our confluence of events that triggers a trade for us, we generally know the future if we've traded it and we have statistics. So, if you're a 60% win rate, you know that 60% of the time this is going to work out to some degree, and 40% you're going to get stopped out. And so, those are some of the things that I think about. And then as far as the boredom, yeah, absolutely. On the trading floor, when we were bored, we left, right?
Yeah.
Guys don't do that. I know I didn't do it on the screen. And it on the screen, it's this traders like to trade. And so getting traders not to trade is one of the jobs that I do with retail guys of really being understanding what it looks and then what it feels like for a setup. And initially, the look is important. Van Tharp talked to his super traders about being able to trade a system 90% or 96 or whatever it was. It was some number. And generally, I like that because once we can follow our framework, then we can really start to add intuitive feel to that, and really then start to I think exponentially grow results. That
John,
makes
do
sense.
you think that, okay, so you said something that made me very happy because I actually have in the trading realm. Part of the reason I'm doing this show and other shows is because I now put on trades and I don't look at them. Like I
Mm,
hardly look at them at all.
right.
I have my stops in place. I have OCOs on the profit side. I always tell people that I like to take a section of a move. So if a market moves from here to here, my trade's from here to here. And that's all I'm trying to do. One of the, I actually coached retail traders for almost a decade. And I got bored and frustrated with that the same way that Jim gets bored and frustrated with the trading because they don't listen. They just don't. And I found one of the biggest problems, they don't listen long term, I should say. And I found one of the biggest problems with retail traders is attaching their intelligence to the outcome of a given trade.
Mm.
Number one, do you find that? And number two, how do you combat that? Let me know if you need an example of what I mean.
No, I know what you mean, and I absolutely do see that in clients. Again, it's more the retail or technical guys. The hedge fund guys are a little different story. They have different issues generally, but yeah, attaching our self worth to our performance is something that is really detrimental. I did it. I really struggled when I stopped when I was no longer a floor trader. Like I loved everything about being a floor trader. Um, and so attaching that self-worth to performance, I think, is where we get into trouble. And then it's really hard because I think, especially at the retail level, people think that they can do this as a hobby. And this isn't a hobby game. It's just not. Go play golf if you want to play, if you want a hobby. Like trading is not a hobby. You have to be serious. This is a serious game that we play. And so detaching that is first understanding why, what about the profit or the P&L or the win is feeding that person, and what about the loss is really attacking that person. Like oftentimes when we have strong emotional reactions, I like to say if the emotion doesn't match the situation, it's probably about something from the past. And so an example of that is, For me, I get very angry when people don't understand me at times because, my dad would show up to the baseball games he did come to. He would show up and tell me what I was supposed to do. It made me so angry. But I couldn't tell him F you, but I can definitely tell the market F you anytime I want. The market listens. And I can vent the energy from an emotion onto the market, and the market accepts. That's the beautiful thing about it. But that usually doesn't end well.
Bobby?
Yeah, so let's stay on that same subject. I'm going to give you sort of a multiple choice and tell me which one you think is the most accurate and why. Which do traders get more upset about? A trade that got stopped out and then the market continued in the direction of the stop. In other words, they would have lost more money without the stop. A trade that gets stopped out and then turns around and rallies towards their entry. Oh, I'm not even going to say profitable because that would be the obvious one. The third one would be a trade that somebody exited at a profit that they could have made more on. In other words, it kept going after they exited a profit. In your experience, I don't care if it's retail or hedge fund guys or both. Which one do traders get the most mad at?
Well, I think it's all of the above.
Mhm.
Like there's this feeling of exiting a trade that it always kind of feels bad in some way. Like getting out of a trade that has worked, like it's like finishing a good book. I always feel terrible after I finish a good book, even though I love the book, because it's over. And now, guess what? Now I have to go find another one. And that's daunting. Getting stopped out sucks.
Mhm.
It just does. And people try to avoid those feelings, and I think that's a mistake. I think losing money is never fun. It shouldn't be. If it's fun, you should call me, because that's something that needs to be worked out. And I do have clients who do feel some sort of satisfaction with getting stopped out.
So why does that have to be worked on? Tell me what neurologically is going on that needs to be worked out.
Well, there can be some sort. So it goes into this idea of there's this emotional logic that we have and intellectual logic that we have, and they oftentimes don't match, especially in trading. So maybe growing up, that person was seen in their family of origin when they made a mistake. I have a client who's like that. He said that he would
That's
make a
interesting.
mistake to get noticed by his dad, who generally neglected him. And so, guess what he does in trading? He doesn't understand why he has a little satisfaction from taking a losing trade, and why he can't kind of get away from the feeling of the positive feeling of losing, in his case, this emotional feeling.
But is that so bad? Because we're not saying that he's intentionally taking losses. So what's the problem with that?
Well, the problem is that he does. I would say part of him does take intentional losses.
Okay, then it's a problem, obviously.
Yeah, and again, this idea of because usually there's a flip side to that, right? If there's a satisfaction or some sort of positive or familiar feel from doing something bad to get noticed, then guess what? When it starts to go well, they get out right away, because okay, yeah, I did. I'm a good boy all the time anyway, and that never
Yeah.
really does much. So I'm just kidding. Again, I know this sounds a little crazy, but you know, Jim, you talked about it at the beginning of on the floor. We were able to scream and yell and do all this stuff to vent all of this energy from the emotions. Off the floor, it's frowned upon to be screaming and yelling at the screen. Some people
Talk to my
do it.
wife; she'll tell you
Yeah,
that it's
I mean,
frowned upon. Yeah,
it happens. It happens. But I think people who didn't have the experience of the pit and understanding that that's a great way to vent some frustration and emotion, they hold it all in, and it just that energy gets stuck. It's kind of like holding a balloon underwater. And like I said earlier, the market will always accept. And if we're able to hold ourselves from doing destructive things in the markets, then oftentimes it can come out. You scream at somebody who cut you off, or get in an argument, because somebody's dog's off a leash or whatever. Like, that emotion generally has to come out if we don't vent it.
Yeah, you're preaching to the choir here. So let's as we talk about emotion. So there are times, particularly when like I'm on a bad spell, and then I'll be like, "Oh, I got a winner. I should take the profit." And then I start sweating it out. I start, feeling, or the loss. I start sweating it because something's happened over the last couple of weeks where I'm on a down streak. So if you find somebody who knows that his emotions, whether elation or despondency, are getting involved in his trading decisions, what would you tell them? It is as simple as reducing position size. What is it?
It depends on why it's happening. By the way, I love emotion. I think emotion is information. So I don't think we should try to truncate our emotions. I think when we do that, when we try to avoid or change, that's when they start to get louder generally.
Yeah.
But when we accept it and say, I'm on a losing streak. I just want to get out of this trade now. But should I do that? And you alluded to the fact of sitting in that uncomfortable feeling and letting the trade play out. You didn't say it, but you're an experienced guy, so that's kind of what you would lean into that feeling and say, man, I know I really want to get out because I've been on a losing streak. I just want some money in the account. But I imagine most of the time you're able to sit with that feeling and let the trade play out, come what may. And then it doesn't bias your next decision. But oftentimes, people who haven't had your experience will definitely get out of that trade as soon as it happens. And then guess what? The next one, they're like, well, I got out early. I'm going to stick with this one. And it goes whatever to their target if they have a target, and they don't get out. And then they go and let it stop them out for the initial loss. So, yeah.
So how do you help people work that out? One of the ways, again, like I said, I used to coach traders for about a decade ago.
Mm.
All right. So it was a while back. But I remember one guy specifically sent me an email that he said, I just figured it out. Losing is the complementary probability to winning. One can't exist without the other. He goes, that works for me. He goes, I'm able to actually think of my losses as like, okay, this needed to happen. It's within my percentages. How do you sort of guide people to say, look, and maybe you don't even say this, you need to be even tempered through all of this. You just said you liked emotion. Do you coach them to get rid of that emotion somewhere else? Do you coach them to keep it and yell at their screen and just try and make sure their family's not home? What do you tell them to do?
So, yeah. So when we're able to recognize an emotion, so emotions are kind of like, when it happens well, it should be like a breeze. The emotion comes up, it gives you the information, you accept the information, and it kind of flows through. It doesn't get stuck. But when we try to avoid it, then it gets stuck and usually gets bigger. And then that causes an action, right? Feelings and emotions aren't actions. There's a little portion of them that are, and we can talk about that later if we want. But generally, we're able to control once we understand a feeling, and generally these things have patterns. So if we start to understand the pattern, then we start to understand what's going on. Like, I have a pattern, and so what I do with clients, I first of all let them understand that what's wrong with being angry.
What's wrong with what?
What's wrong with being angry?
Okay, got it.
What's wrong with making a mistake? What's wrong with getting in too early or getting out too early? And then I start to understand what their bias is, and then I start to work on that bias with them by asking lots of questions. I don't really tell people what to do. I would rather have them discover it, because we've all been told what to do, and sometimes it works, but I would say more times than not, we need to discover it for ourselves. So I ask lots of questions. Again, my first appointment with clients is I work with clients like 55 minutes every week generally. And my first appointment is getting to know their history. So what was it like growing up? How many siblings? What did mom do? What did dad do? Tell me everything. And Some people tell me a lot. Some people don't really tell me anything. They kind of say, I was born in Chicago, I went to college, and then I started trading. Okay, that's information. And so then I start to build a framework, a path that I see them going down. And then some people talk about trades. I have a global macro guy in Brazil. He says hello, he checks in with me. I get about 2 minutes to say anything, and then he's off and running, telling me about everything that's going on with, Mexico rates versus this Colombian rates or whatever. I don't even understand most of it. But then I start to ask questions. Okay, I know his patterns here, so I'll ask a question about that. And then what I really help people do is to understand themselves and their patterns of thoughts and behavior, but both that are good and also that are problematic.
Bobby?
So how do you ever get people that are thinking, okay, I want to start trading, but I think I really need to figure out this sort of, everybody talks about trading psychology, and it doesn't seem to me like that's necessarily what you're talking about here. Do you ever get people who come to you and say, look, I've demo traded for a while. I'm worried that it's going to get to me because, in theory, demo trading, it's great. And if you get it right, all you have to do is mimic it in live markets and then just add zeros to your trades as you go along, right? On a pre-planned basis, I would hope. But do you ever get people that come to you ahead of time and say, look, how can I head off some of the typical things? I mean, you mentioned that trading is hard. One of the things that drives me crazy as a trader, I don't know if it bothers Jim or not, is when people just think, well, just tell me how you trade and I'll do it. It's like, looking at somebody like Max Verstappen who drives for McLaren, right? Give me Max Verstappen's McLaren car. I'm not going to drive it like he does. I'm not going to be able to, finish laps in the same time he does. So why does anybody think trading is the same way? That was 2 questions.
Let me answer the second one first because it drives me crazy too. And by the way, you could tell me your trades. I saw this a million times on the floor. Like somebody would get a trade from somebody else, and then next thing you know, it was going against them. And the guy who got the trade tip would go back and say, "Hey, what's going on?" He's like, "I'm out." Like again, and you could tell me your trades, and I would trade them completely differently. I'm certain of that because I have different biases. I have different thresholds for pain. And I think that is an interesting thing. And I think that's why, Ben Hogan said you got to dig a golf swing out of the dirt. Bobby, I know you're not a golfer, but it's the same way with trading. You have to figure out what is your style based on how you see the world and the market and how you fit within that. The other interesting thing also is that oftentimes the market can act as an authority figure. So, understanding, yeah, a little bit, understanding what that interaction is with my clients and how they interact with authority figures can help me kind of, um, keep an eye out for potential issues before they start to happen.
So in a weird way, I was sort of going in that direction as well, because when you talk about authority figures, and I can vouch for Jim and say he had problems with authority figures as well. So did I. But do you try to discourage people from looking at the market as an entity? I mean, obviously it's a mob of opinions reflected in price, right?
She's a cruel bitch sometimes. Anyway, go on. Yeah.
But it's just like we all look at it and go, if the market didn't do this, it's not my fault, right? Powell said something or Yellen said something. If they hadn't have said that, but this is all encompassing within the market. Do you try and shy people away from talking like that?
I want to understand why people think that.
Mhm.
I had a small group that I worked with, and there was this idea of they keep doing this to me. I know they're going to get me, and I said, well, oh man, that's interesting. Who are they? Just help me out because I don't understand.
Oh, the they thing. Yeah.
Yes, and they said, there were many theys, and so yes, there are theys, but we need to focus on what we're trying to do and do it within our edge. We created an edge for us, not for them or they, and I really don't think I actually talked to a potential client the other day, and he had these beliefs about how he knew that they knew what his orders were, and they knew where he was, and they knew when he took a bigger size, and then they would really get him. And I said, "Wow, man, how do they know that?" He goes, "I don't know. They just do. The algos, they just
Hold it, they might. Sometimes when I'm queuing up an order to buy or sell, I think they know I'm queuing up the order sometimes.
Listen,
I'm not sure, though.
I'm not sure either, but for me, I'd rather understand why that belief is the way it is, and we can work with that. Certainly, algos are designed to get in front of us at times, absolutely. But
That's
like
what
I
I was
said, I'd
wondering.
rather understand why they think about the they, because the they is really it's a projection of something else in their lives, and so
So here,
that's
It's strange. One of the Jimmy, one of the best things ever happened to me in my own personal trading was leaving the trading floor, because you lose that sort of stimulus of the sounds and what the sounds mean. You know what the sound means before you realize the word that's even being said by everybody in the pit.
mm,
And the thing that, I don't want to say it fixed me, but helped me get around some of the big problems, was being able to shrink my position size and widen my targets and stops out
mm,
in order to be able to watch that sort of in between price action and realize that it didn't matter so much. It was one of the best things ever to lose stimulus for me.
mm.
But the anger stayed. So that's really, like, I like that particular comment, because I would say that I pretty much never let the anger just sort of flow through me. It stayed with me for days. I think I still have it from a trade in 2006.
I like the anger, by the way. On you and on me. So here, we had who was on the show who kind of did a little psychoanalysis on me and my childhood and stuff, Bobby. Remember that a couple
Oh,
months
yeah,
ago?
yeah, yeah.
Pretty
I
intense.
can tell you before I can tell you before you're
Yeah, but
done
anyway,
talking.
so I'll tell you a little bit about my background real quick and see if there's anything that jumps out at you. I am from an extremely chaotic household, not always in a good way. We had 11 people in one household. Some of them, there was one particular sibling I have who was a bit of an addict and abusive. We're fine. By the way, I don't want anyone to feel sorry for me. I wouldn't trade my growing up for nothing. So I was told when I was psychoanalyzed, or I don't even know if that's what you call it, but I don't particularly care, is that I need chaos. That's why I went to the trading floor. I need to be on high alert all the time. That's the only time I feel normal. So knowing that about me,
Mm.
how do you dissect that? What would make me a better trader?
Well, uh,
Real quick, it
oftentimes,
was Devin Martin.
Devin Martin. Yeah, he was very good, by the way.
oh yeah, yeah,
Yeah.
I know Devin.
Yeah.
Yeah. So what's wrong with chaos? I love chaos.
So do I. I'm drawn to it. Yeah.
Chaos is my calm. That's my mantra. Chaos is my calm. And
So that's step number one, is for me to just accept that I like chaos. That's what you're saying, right off the bat, right? Yeah.
First, it's recognizing it, then it's accepting it, and then it's saying, okay, what could be done differently? Like, obviously, chaos all the time is not good.
It's not healthy.
But I like my confidence level of when chaos happens, I know I'll be calmer than other people around me, and it will feel comfortable. Now, that doesn't mean I need chaos all the time. And so, what would make you a better trader? Probably, I imagine some of the draw, and you had said earlier that you're not a good day trader. I imagine some of that comes from this idea of when the market starts to heat up a little bit, you just lean in, because that's where maybe I'm speculating, obviously.
Sure.
That's where you want it to happen. Like for me, when vol went up, I loved it. When it was crazy and the shit was hitting the fan, oh man, it was so great. I loved it so much that I stayed in that mindset way too long. So for me, it's understanding when real chaos is happening, and when the trigger of the experience of the past is just wants to be familiar. And I would imagine it could be one of these days where the market's moving around a little bit and you've traded triple what you normally trade. Probably a sign that, hey, this is about the past. This isn't really about this chaos.
Bobby?
You got a comment from Widge that I want to put up here, because Widge is a regular viewer of this. We're friends with him on X as well. And he says, I was front run for a long time by a broker who denied it, but later found out that I was. No idea how much money they cost me. I honestly have never heard of evidence of that. Now, I'm not doubting Widge.
Which, by the way, John Burns didn't say that there was no they. He just said kind of deal with it because there is some theys. Yeah, right.
There's lots of it.
You have to pinpoint who the they is. And a lot of the times they use they without knowing who that they is. It's just a random they that they use to explain
mostly
why
algos people are talking about now, right, Bobby?
Yeah, I mean, one of the things I noticed, especially when you talk about the TMZ of financial media, I think everybody can guess who that is. It's CNBC. But when you hear guys on there, we don't care anymore. When you hear guys on there and they say things like, oh, right now it's technical and it's the algos, that's what's happening. That means they don't know what's happening.
Right.
That means they don't have a fundamental reason and they just say that. They say, oh, this move is technical and it's probably triggered the algos. They have no idea why something's happening. So that's sort of my explanation of they, right? The guys on TV use algos as they. Widge may have a real they involved in his particular trading at the time. I've just never known how that could be proven before. Where did the broker admit it, Widge? If you're not comfortable talking about it, don't worry about it.
But well, first of all, a quick timeout for the people who are viewing, which you guys are the best. And because of that, Tradier is giving 3 months free of Tradier Pro. This is not a small deal. Tradier Pro is the real deal. We've had professional options traders on the show, and every time we bring it up, they're like, oh yeah, that's the system that I use. Just try. It's 3 months, no obligations at all, but it's good for us and good for the show if you give it a try. So thank you guys for your support. The banner's up on the screen right now. Bobby, continue.
I'll give you guys one person, Jay Soloff on Twitter, if you want to reach out to him. We had him on the show. He didn't know that this was Tradier's show. And when the banner came up, he goes, oh, wow, I've been using them for years. Great platform.
I love that.
You reach out to him on X and ask if that's true or not.
Yeah. So Bobby, what else you got? You were in the middle of something. I want to cut you off.
Yeah, no. So I guess my whole point of this is when you look at somebody on a win versus loss, I can only talk about what worked for me, and I didn't get any coaching. And the best coaching I ever got was leaving the floor because it was a disaster for 18 months, right? My whole time on trading when I left the floor, when I was on the floor, it was no more than a day and a half average, right? Now it's 26 days, my whole time over, say, the last 6 years. 6-7 years. It's actually started to slowly come in lately with some of the volatility we've had. But that's the only thing that really worked for me. And I do have a personal thing that I think I told you about, John, on our call as to why it got easier for me over time to trade. But it really came with the idea of accepting that losses were going to happen. I have one particular pattern, and when I say it's me and Mike Arnold developed this pattern together. For those of you that know who Mike is, we developed a pattern that had about 62% win rate. And I used to always tell myself, hey, I can lose 38 in a row out of 100, and I'm still within my win-loss rate. Does any of that make sense to you, or is that just me masking things that I should have worked on? I mean, I know what was wrong in my childhood.
Well, yes, that makes total sense to me. And I was speaking to a client this morning. This guy is a super interesting guy. He's actually a cardiac surgeon, but he's turned into a really good trader. We've been working together for about 3 years or so. And he has this line that he's been saying recently, which I love, saying, when I'm 100% sure in trading, that's only 60%. And I need to remind myself of that. And Bobby, understanding the number of runs that you can have in a sample that is still within the sample is super, super important. I ran up against that too when I had a mechanical system that I was doing. And the risk manager called me in, and I remember saying, yeah, it sucks, but unfortunately, this is within the expected, sample. So I have to take the next trade. And thankfully, they let me, and it worked out. But yeah, you have to understand those things. And I want to go back to they real quick, because what I was saying about and I'm sorry that had happened, that the broker front ran you and it cost you a lot of money. It sucks. People are assets sometimes. But my point with they is understanding what that means for the trader. What is the trader not doing? What are they avoiding looking at themselves because of this phantom they that they've made up in their mind? And for me, it's more about trying to understand who they are, and then understand what the person thinks about them, and then how that affects their trading. Does that make sense?
It does. And I want to follow up with Widge because he did add more to that. Widge threw in to the comments, just because I love this phrase, this saying, by the way, just because you're paranoid doesn't mean they're not after you.
I like that.
Freaking Widge is the best. Like, John, if you're on X and you don't follow Widge, you should.
All right.
I was trading some lower volume stocks, and you'd not see trades come for minutes at a time until my order came in. By the way, I hate lower volume stocks, Widge. And then he's got a follow up to this. This went on for months. Called discount broker a couple of times to raise my concern. A couple of years later, the front running thing made news, and that perfectly described what was going on. That's fair enough. Yep. I mean, I would take that as proof as well if I were you, Widge.
Yep.
But now keep in mind that some of the front running that's happening is perfectly legal. If you read Flash Boys at all, it's just fascinating. Right. If that your order hits one exchange and buys 15 lots of Apple on one exchange, and before it's routed to the next exchange to finish up your order, somebody's beat you there and grabbed it, and you're paying a couple ticks higher. I mean, algos really are, eroding your exit and entries. By the way, when I was on the phone,
we used to front run
in the currencies, we used to sometimes, if we thought there was too many locals, bird dogging us and looking at everything we're doing, we'd put in orders backwards just to see who would flinch. Oftentimes they wouldn't, because they're good at this too. They can tell the body language too, but there's been more than a few times like, hey, buy those, pay 2 of them. And my broker would just turn around real fast and then know that we had set it up, that there was nothing happening, and see if someone would buy it. So it was kind of fun. Yeah. Yeah.
And that's the funny part. I mean, again, I remember when the CME basically allowed customer front running, right? They came out with a new rule that said you could customer front run, but like their orders were so much bigger than ours that it didn't really move the needle that much.
Yeah, no, I'll take 2 lots in front of their 10,000 lot.
Yeah,
exactly.
I'm not saying I've done it, but I'm not saying I haven't.
Yes.
But again, going back to what, got me back sort of on the straight and narrow of trading was, so Widge said in here that he was trading some low volume stocks and stuff, was for me to trade really, really small. When it was stocks, it was higher volume stocks and higher price stocks. And when it was futures, I went to the smallest contract they had at the time. I couldn't trade crude oil, even though it was one of my best analytical labor, right? Yeah, but I couldn't trade it because the contract was too big. Yeah. So I would trade the mini S&Ps and anything else they had as minis, and I would do very small orders, and I would be this wide so that all that stuff going on in between didn't directly hit me. And I still preach that to traders. But again, most traders, to you, John, seem to think that they can trade for 2 or 3 hours and then go to the gym and then go to the beach, both of which I like to do on a regular basis when I'm in a trade. But, that kind of a thing is what I tell traders now. I just told one recently who reached out to me on LinkedIn. Your job as a trader is very boring. Yes. Because it should be anyway, right? And Jim, you'll attest this as well. The life you make outside of your particular trading hours is what's exciting. Is that fantasy land, or am I right on that?
I believe that to be true. Yeah, absolutely. And yeah, I think Peter Brandt talks about this as well. He considers himself a glorified order entry clerk. Now, Peter Brandt has been doing this longer than all of us, and maybe all of us combined. I don't think all of us combined, but he's been doing it for.
We're older than you think.
I am too. So, in any case, yeah, I think that's true. I think and I think that was one of the harder things for me to adjust to as well. The level of excitement on the screen. I mean, it doesn't even compare to on the floor. And so, if you're trading for excitement or profit, like when I check what I'm thinking about when I put a trade on. Like if I'm thinking about this is the one where I'm going to buy 3 Ferraris, it's probably not going to work. And then, when we start to trade for money, I actually have a guy who has a crypto fund. It's kind of a secondary fund for him. And he's been really struggling. and he started to trade for money to, you know, to get it from one level to the next level. And guess what happened? It didn't go very well, because when we trade for money, when we trade for excitement, it just doesn't work out, because none of those things are in the system or the style or the framework that we operate within, you know, that finite game that we're trying to play.
So hold, Bobby, real quick. Let me
Yeah,
interject.
go, Jimmy.
That could be one of the real main takeaways that I think is interesting. And there's been several good takeaways, but you're suggesting, by the way, I fall victim to this too, because I'm a bit of a cheap ass and a skinflint. And when the money's going against me, it's like, shit, that's a lot of money. But what you're saying is change your mindset, change it to points, change it to success or not success, and then work from there. But the second you start thinking about it as, you know, this, if I get 5 of these in a row, my retirement house is going to be $5 closer to the beach than it would have been otherwise. You have to change your mindset to what, like a points system? Is that the way you think of it, or you should, or what?
Well, a couple of things. One, trading the system according to style and keeping track of how many you do. Like, and also keeping track of how many you trade outside of your framework, whatever that is. I think that's a good focus. I also think that, yes, points is fine. You know, again, everybody, me included, have gone through and said, okay, I need to make whatever, $1,000 a day. And if I make $1,000 a day, okay, but returns aren't linear, unfortunately. And so that doesn't work, because then we start to press. If we have a bad day, well, now I need to make $2,000 tomorrow. And then all of a sudden we're into the money. And so thinking about understanding that returns are not linear, I think, is also important.
So do you think it's bad for people to think about money at all? Again, going back to my old mentoring days, which I don't do anymore, I used to tell people all the time that, you know, if you think in percentages, it's a lot easier to grow your account. So in other words, you'll hear people say, I need to make $1,000 a day. And my theory was always, well, look, if there's an amount of money you need to make, it's time to drive an Uber, right? Or do something else, figure out a different way where you can make that money. You can exchange your labor for that amount of money. Would you say that thinking in percentages is a smart way for people to go, or does it take the sort of emotional high out of the wins that people might need?
That's a really good point. I think it depends on the person, but I generally think focusing on process or basis points or percentage points or something other than raw dollars, and then having a time frame where you really focus on it. That's not every second or every tick. Like, you know, there have been times when I'm like, it goes against me, oh no, it goes for me, yay, it goes against me, oh no, yay. Like, you know, that's an emotional roller coaster. And the other thing too is that these decisions about the confluence of events that creates our trades have already been made. There shouldn't really be much decision other than these 3 things. Now, again, some more experienced people have more intuitive type things. Like, I trade a little bit more intuitively these days than fully focused on that. But I think it's, if you're trying to make a decision about a trading system decision when the market is open and you have a trade open, I don't think that works out well.
So
Bobby,
what
can I
is
ask a question to both of you, actually?
Yeah.
So
go.
John, first to you, you've dealt with a lot of traders. If you had to, like, and this is just an opinion question because it might be difficult to answer, like, who has the best result as far as time frames of traders? When you meet someone who fancies themselves as a day trader, closes positions out at the end of the day, that's in one basket. Other traders who are swing traders and have a couple week time frame and try to maybe even use options to take some of the emotion out of it to trade their thesis. What would you say? And this is an opinion of John Burns, not only backed by your anecdotal evidence. What time frames do you think people tend to be the most successful at?
I would say generally the longer the better.
Okay, because then you're not sweating each tick, right?
Right.
Yeah. Bobby,
And
do you
it's
agree with
easier.
that?
Yeah.
I do. You know, I think the overall thesis behind trading is similar. I've said this before. It's similar to leaving a restaurant with your doggy bag, right? You don't go around to the other tables and take everyone else's doggy bags. Like, as much as I like to detach my intelligence from the outcome of my trades, otherwise one day I'm dumb and one day I'm smart, right? I just like to say, no, that's just what happened today. So I totally agree with that.
Yeah, that's interesting.
Yeah, and the other thing too is that the smaller time frames that we trade, the faster we trade, we're trading against algos. Like that's the time they're trying to game everything anyway. So again, I want to avoid. That's not my edge. I know I can't compete with those guys. So why try? Now I
So,
also
why-
know that they're going to take a little bit off of each trade that I do, but that's just the price of doing business.
Right. So I'd rather at this point have like 5 different, because again, I need the chaos and the adrenaline, but have 5 different 2-week positions on that. So the monitoring them is, and sometimes that precipitates a trade almost each day, but not in each one.
Yeah.
So I find I have more success with that. But one thing I wanted to share too is that, like I said, the last week or so, I've kind of got my ass handed to me a few times. Tomorrow, I am just going to trade microcurrency futures, risk a couple hundred each way just to get myself back in the game. I've done this many times before to get my mindset right. You think that's a good strategy, right?
I love it.
Okay. And Bobby, you do the same sort of thing sometimes, don't you?
Well, it's funny. I have gotten to this stage where I think my job as a trader is to put on every good trade I see, regardless of the previous outcome. Because I feel like if I don't, the one that I skip is the one that's the winner, right? It's just like, it just always happens that way. So, and it's really hard sometimes, really hard. So I try to pre-plan out days where I'm just, look, I'm not even going to do anything. I'm not going to look at it, but I still do my analysis on those days. And if there's something compelling, I don't know how you guys feel about this. I don't have sort of a confluence of factors thing involved. In other words, like some people, one person I specifically know, Jimmy, you know him too. He says if he has 3 or 4 things pointing in a direction, he'll take a bigger trade. And I don't see any logic behind that. And the reason, let me defend that, and then you guys can rip it apart if you want. If you have one system that's 62% accurate, as Mike and I do, or you have another one that's 80% accurate, another one that's I don't know, 50% accurate, right? And they're all 3 pointing in the same direction. That doesn't increase the probability, in my view, that this isn't one of the 50% negatives and one of the 38% negatives and one of the 20% negatives happening at the same time, right? And I think it is much more important to protect your capital, because if you protect your capital, the gains come out the back end. As long as you're putting on every good trade you see and you protect your capital, the gains just happen, right? Maybe not as fast as you want. Maybe not as frequently as you want. Maybe you don't like the losing streak you just had. But is a confluence of factors, am I wrong in that? Is that just me being chicken shit?
No, so what I mean is a system is a confluence of factors. And so that's, some people use, probably not anymore, but, moving averages crossing with an outside day or whatever. To me, that's a confluence of events. But I absolutely 100% agree with you, because again, the highest conviction that you can have in that scenario you just played out is 80%. And that doesn't mean it's going to fall in the 80% sample. I also like the idea of leaning into the trades. And that's one thing that you kind of made a remark of. The one that you don't take is the one that's going to go. And when I'm trying to help my clients do things differently, whether, let's just use the example of kind of staying in a trade that's in that kind of not working phase. And we're working on that. And I say, okay, here, we're going to try to stay with that one today. But understand that the first time you do that, it's probably not going to work out. And you're going to be, John's an idiot. He doesn't know what he's talking about. I'm fine with that. Come and tell me that. I'd rather have you tell me than act it out on the market. But guess what? We're probably going to try and do that again. So I agree. The universe, when we try to do something different, we usually get the old kick in the old groin there, just to test if we're serious.
Can you say that sentence again, but use the word nards? We're trying to bring back.
You're bringing nards back?
We're trying to bring nards back. In my eulogy when I die, I want someone to say he worked very hard on bringing nards back in the 20s.
I will say, actually, what you just described, John, is my current biggest problem. is like I fight off that natural instinctive thought process of it doesn't work as quickly as I want it to. It's probably not going to work, which statistically isn't true. So if I statistically backtest something, whether it's just a manual backtest or I use software or I do Monte Carlo simulations or whatever I'm using at the time, I don't say take the ones out that take 2 weeks, take the ones out that take 3 weeks. I don't put that as an input. I just say, okay, this many won. All right, this is a solid system. Now let me demo it. Now let me put some money behind it. And then look at it from that perspective. Then I'll have one where it's like, God, I've been like plus 0.2% on this for 3 weeks. I should just get out of this. I'm missing other opportunities, even though that's factually not always true.
So,
So
Bobby,
what's
I would
going
like to
on in
address
my
something.
brain with that? What's that?
Because
Jimmy?
I disagree with you on the whole, if you're, a conviction, Bill Gross a lot of times talked about the whole, the blackjack thing. If the dealer's got a 6 and you have an 11, you want to push more money onto the table. This is one of the rare things I disagree with you on, which, by the way, I'm not talking about quadrupling your size, because as soon as you stick your chin up a little bit, boom, we all know what happens. I'm talking about increasing sizes a little bit based on conviction. So you're saying you never do that?
No, because if I have 3 systems, I trade them independently, right? So what I'm trying to point out is, like, let's say on my 80% system, I have 10% allocated. None of this is accurate, right?
Right.
And Doug Sarbon has an interesting comment I really like, by the way. Luis will put it up there in a second. But if I have 10% allocated to my 80% win probability system, right? And I have 10% allocated to my 62% probability system because it trades more frequently, right? And I have 10% allocated to my 50% system because it trades even more frequently, right? I'll put all 3 10% on, but not because they're all 3 pointing in the same direction.
Yeah,
right.
Just because each system is
Just
independent.
because each system has independently, and I really like what John said here, and I've never thought of it that way, and I will talk about it going forward, is that in each one of those systems, there's a confluence of factors, right?
Yeah.
I don't think, and I could be wrong about this, John, please chime in. I don't think the blackjack example is a good one because that's one system, right?
Yeah.
But am I wrong about
Let's
that,
read
John?
Doug's comment real quick for people who are just listening, not watching, because it's a great comment. It's the thing about backtesting is that a backtest never panics out of a trade, which, by the way, I sometimes do panic out of a trade, and a backtesting system is not. But anyway, John,
That is great. We should give you the applause. That is your emoji there, Doug.
Yeah.
We call it an emoji. What do we call it?
I don't know. Yeah.
Bobby, I will say, though, that maybe tracking that intuitive feeling and saying, oh, I feel like I need to get out of that, and tracking that could potentially give another edge. And what I mean by that is that for me, I noticed that when I said to myself, that's why I have a stop, that trade was going to get stopped out. And so finally, I realized when I had a trade that was in that middling range, not doing much, and that feeling came, I would get out of the trade. I paid attention to what happened, and I started to use my intuition, my unconscious pattern recognition, as information as well. And by the way, retail traders are convinced they have intuition, and guys who have been, not floor guys, but guys who are hedge fund managers, it usually takes me a while to convince them that they actually do have intuition and to find out where it is. For example, I have a guy who is at a hedge fund, and his kind of intuitive edge is with the CEO and the CFO. He gets lots of information from how they answer questions. Now he's already screened the numbers and he's interested. And then when they answer it well, he's in. When they answer it poorly, it's a big mark against. And working together, we kind of figured out that that's at the top of the list rather than at the bottom of the list, which is where he thought it initially was. So I think developing that intuitive feel in trading is helpful, but you have to be really careful because there's also impulse in trading, right? We all have impulse. And initially, when you start to get intuitive feel, they sound the same. And so it's this, I think it's very important, but it's also very cautious about saying. Sorry.
So if you, okay, so we have to wrap up here. We come against a hard wall sometimes too, but I want a takeaway, and that could be the takeaway right there, is learning the difference between impulse and intuition. But I'm not going to put words in your mouth. Let's talk about someone. Let's describe someone who's been trading. They've passed the year mark. They're still trading. They're doing fine. They're not doing as well as they want to do. Is there some broad, general mental mindset tricks, tips you can give? Just broad.
Yes.
Good.
Look at the patterns of where your mistakes happen and focus on what the thoughts and feelings are around that moment. Understand it where it is in the trade cycle, and then understand what the feelings and thoughts are around that. Why is it a repetitive or recurring mistake? And really diving in and trying to understand that can offer some opportunities, not only there, but other areas in your life and trading as well.
Fortunately, the last 2 weeks, I have a lot of mistakes to look from. Bobby, you?
Yeah, just real quick. What I know this is probably not a brief answer. Certainly not going to be a brief question because it's me asking it. What is actually going on in the brain when you're making those repetitive mistakes? Is it chemical? Is it electric impulses are taking you there from something in the past? What I want to understand what's happening in the brain when that happens.
Yeah. So when we have an automatic reaction, like is kind of when a repetitive mistake is, where the action just happens, it's because it's saved in kind of this non-declarative part of the brain. And the cortex doesn't have access to that. So the only way to think that feeling is to act it out. And so when that feeling is triggered, there's an action. And so when I work with clients, I try to get to those areas and then use neuroplasticity to create an end around that moment. And so the way we do that is we first recognize it, kind of what we were talking about with Jim earlier, and then try to move that timeline back to say, there's that feeling again, and there's this moment. I need to really be on the lookout because I know I automatically get in, get out, double the size, whatever the case may be. And so over time, with putting lots of words around it, I'm able to help clients make that kind of new connection.
Very cool. Where can
help
people
Jimmy
find
with his
you?
drinking?
Oh. I'm trying to drink less, by the way. That's my New Year's resolution. It's not going that well so far, but I'm trying to dial it back by like 30%. So
that's good. I like that.
Yeah.
Good. You're using percentages. I like it.
Percentages, right? It's your point.
Love it.
Last night I failed. I was unsuccessful. My mistake is the wine with dinner just tasted too good. So, but anyway, I learned from my mistakes. But anyway, where can they find you, John?
Yeah, Twitter. I'm not, or X. Sorry, I'm not really on X, but I have a X account. It's on the screen now. JPBJR800. LinkedIn. I'm on there. Substack. John Burns. My Substack is John Burns. I have writings on there. Articles I've written about repetitive mistakes. This cool thing about a professional baseball player I worked with who was comfortable hitting 9 home runs, and I asked him why. And he hit 20 the next season just because he understood that he didn't have to limit himself. So again, there's some articles there.
Wow. I'd like to hit 20 home runs in the bigs, but I'm 5'8" and not very athletic. But anyway, no, so we'll work on that problem next. So if you can coach me up with that.
As your sidekick, I know you are very athletic.
There you go.
I'm not bad. Thank you, Bobby. But anyway, this has been the Trader's Edge. I'm Jim Iuorio. That's Bob Iaccino. That's John Burns, who is a mental skills coach. By the way, you're the 4th John Burns now I'm 3 who are friends. If we become friends, you will be the 4th named John Burns.
Nice.
So it's one of those names, particularly if you're an Irishman in Chicago.
That's right.
You know a lot of those people. But thank you to all of you people who stuck with us the whole time here. And remember what Bobby and I are trying to do. We are trying to create alternate journalism platforms to the legacy media, which we think has been poisoned by overzealous producers and sponsors. We have sponsors too, but we don't let them, they don't care if we say our honest opinions. So we might be wrong, we might be full of shit, but these are our honest opinions. Thank you for joining us on the Trader's Edge.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.